Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here on January 12th, bringing you some commentary here in the energy market. So let's get started. Well, we've had mostly a weaker tone here through the overnight, most of the morning into early afternoon. Energy prices in general have really been slumping. February oil right now, we're off about $2.33, trading right around $46 a barrel. It's the lowest we've seen here in the contract right now. That's off about 4.8% today. So quite a bit of weakness there. Brent weaker as well, trading about 47.39. That's off as well, about 2 3/4. So we're seeing the weakness across the board. Nat gas off about 15 cents. That's off about 5%. Complex weaker. RBOB's off about 4.82, and the heat's off about 4.80. So like I said, weakness here across the entire energy complex. And you take a look at some of the fundamentals here this morning. You got weaker equities kind of rolling over a little bit. The dollar continues to be strong. And, I've talked in a lot of these posts before here, that dollar, as strong as it is, dollar index now trading upwards of over 92. That helps to put pressure on a lot of commodities, especially oil, as oil is priced in dollars. We're also seeing, a recent Goldman coming out here, Goldman Sachs, in an article targeting $40 a barrel. So I think that's going to get traders putting, helping keep a little pressure on the market as well. But, the one thing I got to point out, though, is, Goldman has been wrong before. Early on, they were projected here to see crude prices targeting around $70 a barrel here in about the first quarter, roughly, of 2015. And here we are trading, obviously, substantially lower than that. So, but nonetheless here, we do have a major investment banking firm here targeting oil prices to move even lower at this point. And I think one thing that, traders really need to focus on, and it's something I've talked about in so many of these posts, and obviously, we got to look back here at basic supply and demand type issues. Look at our current stockpiles right now in oil. Current stocks are around 382.4 million barrels. Now, our previous high for this time of year was around 361.3 million barrels. So we've got 20 million more barrels on oil right now than we've had, for this time of year. And of course, that obviously, coupling with the demand, we've seen the EIA late last year. They revised demand outlook lower here for the first quarter of 2015. So I think that's what's ultimately kind of helping sag here in the energy markets. Now, capacity utilization is up, trading around, at about 93.9% versus 92.3%. So we are starting to see some commercial interest pick up at these levels. You're also hearing talk about, refineries here looking for extra storage capability as they're starting to hold some of this oil. And I think, all of that is getting ready in anticipation for potentially higher oil prices. I'm not saying that we're at the bottom, but I do think we could be getting closer to a bottom at these price levels. So I think traders here, if you're looking for some opportunity here on the long side of the market, you have to be very cautious, but we could discuss some different strategies and how you could potentially take advantage of that. So give me a call or shoot me an email and we can get into more detail.
Futures and options on futures may involve substantial risk and may not be suitable for all investors.